Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. First, thanks to everyone who likes this video and all our subscribers. I appreciate your help with the YouTube algorithm, as this allows us to bring you more and better content. So again, thank you for that. The markets have been decidedly uncertain recently. This is hardly surprising given how expensive the Standard & Poor's 500 and the NASDAQ markets are. And there is a considerable range of opinion about what's coming next, a setback or onwards and upwards. The S&P has broken out, but I'm inclined to say only sort of, because there has been precious little follow-through, and we are still within the margin of error for such events. And this has been reflected in the performance of the FANGs overall, which I would describe as being increasingly ambivalent. The NASDAQ 100 is of particular interest because overall it is also reaching a major SVA breakpoint at approximately 10 times its book value, or the HB2 as you know it. An extreme and probably unsustainable overall level that it has never reached before, even in the 2000 to 2002 high-tech bubble and burst. Of course, this has not stopped the speculation of the week circus from going on with, it seems, a different stock or group being featured in yet another wild boom and collapse. Or perhaps it's all too understandable. This may be a market which is desperately seeking something to latch onto, but is finding love in all the wrong places, as the song goes. Well, this has been a relatively quiet week for the FANGs. At least one development is of major concern. So let's take a look at the FANGs and see what's going on. Let's start off with Amazon. And, well, after 3 times trying to get through its HB4, the stock is set back to its HB3. That's 16 times book value, and has just been bumping right along there, unable to get any traction on the upside. But there it is. So we're watching it. Facebook, well, remember we had a beautiful, beautiful sell in August, right up at its bubble price, and it set back to its mid-super growth price. That's 5.5 times book value. Momentarily kind of broke down, but is pulled back on side. I'd like to make sure that it stays there, but nonetheless, this is a stock that I would hold. Alphabet, well, Alphabet has been a wonderful trader for us, hasn't it, over the past few months. We got a sell signal way back in August of 2020. It set right back to its low super growth price. That's 4.5 times book value. I said, look it, we got to go at this thing again, and that worked out beautifully because it moved right up back again, actually a little bit higher than before, but it right up to its mid-super growth price again, 5.5 times book value. After knocking on the door 3 times, the stock has broken out. That's a very promising development, and it's broken out on increasing fair market value, that is to say, increasing earnings forecasts. Microsoft, another stock that would be in our, what I might call our Phantom FANG portfolio. It's broken out as well. Not nearly as decisively as we just saw with Alphabet. It's broken out, but you know, I'm just a little bit cautious here yet. Nvidia, well, Nvidia has broken out as well. Now, I've been talking about this stock for some period of time because the fundamentals, I think, of the semiconductor industry are quite good. And so it is very interesting to finally see the stock being able to poke above its HB4 price. However, it has to hold here. Netflix, what can we say about Netflix? It's tried and tried and tried. Look at that, 4 times to break out, and has never managed to succeed, despite what appears to be very, very strong fundamentals. This is kind of the apotheosis of the COVID stock, the kind of the stay-at-home kind of company that you'd want to own. But maybe with things are starting to open up, maybe the stock has reached its zenith, and perhaps that's it. Finally, we take a look at Apple, and Apple had been performing so nicely for me for such a long time that I must admit that I am concerned when I see the stock possibly breaking down below its HB5. It's not yet confirmed, but nonetheless, this is really the first sign of weakness in this company that we have seen from a trading point of view for a long period of time. So in summary, what I might call my FANG portfolio, if there's a good time to buy Amazon, it's right now at the HB3 price, or 16 times book. But I'm also watching that HB3 price a little nervously. It had better hold. Facebook enjoyed its nice little earnings fill-up and is holding, a little wobbly perhaps, at its MSG price. That's 5.5 times book. Alphabet has broken out nicely over its mid-super growth price, 5.5 times book. Gosh, we've had some awfully good trading opportunities in recent months, and right now this looks like higher, and I'm really happy to be here. I welcome Microsoft into our Phantom portfolio with that breakout over its HB2 price, that's 12 times book, and of course that nice little fill-up in earnings. However, that breakout is nothing like Alphabet's in terms of percentage follow-through, and I am not yet a true believer. Even Nvidia is trying to break into the game. The industry is hot, as I have said several times before, but the stock has been slow to react. Speaking of Bitcoin, which I wasn't, but must at least allude to now because of its massive price increase, one thing that did emerge last week, that there is strong demand for chips that can help Bitcoin mining. So I am keeping one eye open for a confirmed breakout here. Mind you, I am keeping the other eye on Bitcoin itself, as I suspect that the price of Nvidia may well be influenced by it. Netflix, for all its nice numbers and even that little fill-up in its earnings trend, has yet to offer investors any satisfaction. Personally, I'm still waiting to act. Now, last week, I noted that Apple remained comfortably above its HB5 price, that's 26 times book. But this week, things have changed unexpectedly. Tim Cook has really crossed the market up and stopped, for the moment at least, buying back stock. Do you remember a few months ago I set out the process for turning this $2 trillion market cap stock into a $4 trillion market cap stock? And I showed you how it could actually be done. New subscribers can find it easily. In summary, to do that, Apple would have to keep on buying back its stock in order to keep driving up both its return on equity and its valuation in price-to-book terms. However, spoiler alert, once this buyback process ends, then the valuation tends to become stranded at an unsustainable level, which it may be right now. And I am wondering if the market is reflecting this. My takeaways this week are: first, the market is dithering just above its breakout level at its super growth price. That's 3.5 times book value. But the FANGs are not the leaders that they once were. They seem more to be followers now. Second, Apple is now a concern. Just like at breakpoints, in breakdowns, I look for a breakdown and then a pullback. I also like to see at least 5 days. for any breakdown before I usually consider it to be confirmed. I hope that Apple is not taking a torpedo amidships, but I am now wary, following what seems to be a change in corporate strategy. Anyway, for now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday. Until then, stay safe. This pandemic is not over yet.